Okay, well, I think we can get started. Thanks for joining us for our webinar to discuss sales and marketing tactics for selling software in a downturn. I'm John Gu, a principal on the software growth equity team at Norwest Venture Partners. In recent quarters, we've seen a broader slowdown in the economy that has impacted software sales. And today we're speaking with some CROs at a few Norwest portfolio companies to better understand how they're operating in this market. With us today are Phil Hodge, CRO of AbsentSoft, Ken Sims with Flowcast, and Jimmy Hart with Yipit Data. Today's webinar will be recorded and sent out to folks that have registered. Feel free to submit questions in the message box during the webinar. We'll try and answer them at the end. And with that, I'd like to have our panelists quickly introduce themselves and the companies that they're part of. And now the blog post that is associated with this webinar too, and we'll send around details for that too. And so maybe to kick us off, we'll go over to you, Jimmy.
Great, thanks, John. Appreciate it. So Yipit Data, we're a leading market insights firm, essentially providing actionable data for the world's largest investment firms, retailers, brands, and disruptive companies. So we're about 500 people today. We're backed by Norwest and Carlyle with people all throughout the US as well as in APAC. I'm the Chief Revenue Officer here, so I've been at the company since 2016 and actually was one of our first two salespeople. So thanks for having me.
Thank you. Maybe you, Phil?
Yeah, thanks, John. Thanks to you and the Norwest team. It's great to be with everyone today. My name is Philip Hodge. I'm the Chief Revenue Officer here at AbsentSoft. And for those of you not familiar with us, our technology empowers employers to take control of their leave and accommodations process, bringing a higher degree of certainty and efficiency that they don't have today. I've been at the company for 18 months and had the pleasure of essentially building the sales and a portion of the marketing function from the ground up. So again, great to be here and look forward to the discussion.
Thank you, Phil. And Ken?
Yeah, hi everybody. I'm Ken Sims. I'm the CRO at Flowcast. For those of you that aren't familiar with Flowcast, we are an accounting operations software platform. We help accounting teams manage their internal operations, starting with the monthly close process to reconcile all your accounts and make sure everybody is on top of what they should be doing in their respective department. And yeah, I've been with the company 6 years now, and it's been a great run. We have close to 600 people, I would say.
Thanks, Ken, and thank you for everyone for joining the webinar. So just one question on the market. Given the market slowdown, we've heard that software purchasing cycles have elongated and become tougher. What have you guys seen in recent quarters regarding buyer behavior? Maybe we can start with you, Phil.
Yeah, I was happy to jump in, John. Elongated is the right word. For us, without question, our enterprise sales cycle has been elongated. The way we think about our enterprise business, our employees, we have a price per employee per month PEPM model. So our enterprise business is 10,000 employees and above. The first year at AbsentSoft, when we got to what we call technical review and then contracting, the tail end of our sales cycle, our close rate was virtually 100%. We saw very little deal slippage. We almost always got those deals across the finish line. And then about in Q4 in 2022 was the first visible sign that was cracking a little bit. We had a few deals that were in the final throes of contracting that were pulled out at the last minute. And that kind of heightened visibility in the enterprise space has continued to be there for us. Interestingly enough, we see it more, and probably not surprisingly, where incremental spend is involved. Said another way, if an organization is already invested in leave technology or leave outsourcing, and it's just a shift of the dollars, knock on wood, we've been relatively successful in still getting those deals done and pursuing those deals, although we have had to make some concessions on our contract terms. And I'll say last, on a more optimistic note, what we call our large business, below 10,000 employees, where they've never really invested in leave technology, but the pain is getting so bad they have to do something. that business has stayed pretty consistent for us. Smaller deals, obviously, but we haven't seen the elongation that we've seen in the enterprise space. In fact, that those sales cycles have sped up for us.
That's interesting. That's like the larger accounts that you're seeing a lot more work to
Yeah.
work. How about for you, Jimmy? What are you seeing in the market?
Yeah, I think, look, we've definitely seen increased sales cycle, over the past year as well. Both that's on new business as well as upsell. But both are relatively quick for us. We're sort of, I'd say, like closer to sort of enterprise price point, but sort of shorter sales cycle. And so it's definitely expanded quite a bit from sort of the 6 weeks we were seeing about 2 weeks ago, 2 years ago on new business to, more sort of around the 12 to sort of 15 now. I think across the board, across, our main client base are investments funds, I think public, private, long only hedge funds, as well as retailers, brands, and I think disruptive companies like your, food deliveries, ride sharing, payments businesses in the world. And I think we're definitely seeing just across the board organizations focusing on efficiency, cutting costs where possible. But generally, I think where it's hitting the sales process mostly is raising the bar on new spend with existing and new partners. So what we're seeing, and I think is from people, I spoke to them probably both for Ken and Phil as well, is I think there's been new layers of approvals implemented and often up to the C-suite for every cost. And even some very large public companies we work with going right up to CFO, CEO, which can delay and cause timelines to shift. And essentially, the more people you have to speak to, the longer it takes to close, especially if you don't get ahead of them. If you're surprised later on by a new approval that didn't exist before or someone else being involved, that can slow it down. So I think for us, what it's mean is, and one of the things we're focusing a lot on at the moment, is making sure that, not only you have a clear sort of pain point and challenge defined, as well as how you actually help them solve that, but your champion internally can clearly articulate that. What's the problem? How do they solve it? What's the ROI for their business? I think what we've seen is sometimes, your main contacts, depending on their seniority, won't tell you that. But I guarantee you that someone's going to be asking that for them. I spoke with, about 2 weeks ago, I spoke with a senior exec at a very large retailer recently, and he started off the call, it was a one-on-one call. He started off and said, look, set expectations. I'm not buying anything from you unless you help me sell more product. And, you don't always hear that from your buyers, but someone internally is going to ask that question. And so making sure you're really buttoned up early in the process, you've really defined, the problem, the solution, the ROI, the outcome, and equipping your champion, we found is going to be probably one of the most important pieces. And definitely, I think, has become more important than it probably was before, just given the market change.
Really appreciate that perspective. And Ken, are you seeing more approvals like getting layered into Flowcast deals as well?
Yeah, I think that's been the biggest change. I mean, a year ago, we sell a mid-market software solution. Our average price is in the $40,000-$50,000 ACV range. Year ago, the accounting team, the controller could buy that. Now every deal is going through the CFO. So we have to, as part of our sales strategy, have to figure out how to get to the CFO and how to make sure that he's on board. One of the things it was interesting, I talked to a CFO of a very well-known and pre-IPO company last quarter that we closed a deal with, and he made it very clear to me. He said, I'm not going to tell my team what to buy, but I told them that any solution that we are going to buy has to be accretive to the business. And so that was a new concept for our sales team. I had to explain to our sales managers, this is what he means by accretive, and you guys need to be able to not just get people excited and wanting the product. You need to show them that there's going to be a positive return on the business, that they're going to get more out of it than it's going to cost them to purchase.
That's really helpful to understand.
So to your point, I think someone also needs to, if they've got to go up to the CFO or maybe the head of their department to actually make the case, if they're not confident in it, they're probably not going to make the request. And so, they won't even get that far. And so it's just heightened pressure internally to make sure that what you are taking up for approval is solid.
So I'd love to touch on that point. I mean, it seems like that you guys are making changes to address some of the things that you're seeing in the marketplace. But one thing you both kind of mentioned is kind of the involvement in the CFO's office. Love to hear about how you guys are just helping your customers buy your product a little bit, or how you guys are using other techniques to just sell in this environment, given what you've seen. And maybe Jimmy, you could kick us off. It seems like you guys have done some interesting things there.
Yeah, I think the big thing is, a few things we've thought about is most of the time for our team, we've spoken to our team about this. Most of the time, you're not going to meet the CFO. Like usually, you probably won't, and that's actually not a problem. That's okay. But you need to make sure that your champion, or maybe you're the department head who works for you, who's the champion's manager, or whoever is in the organization is equipped to have that conversation, because they will. Someone will have the conversation with the CFO, the VP of finance, depending on the level you need to go up to. And so I think, getting ahead of that as quickly as possible. And if we're in a point where, and we can talk about this, which is if you're in a deal and you're kind of, everyone's interested, sounds great, but you can't really articulate the exact benefit to their company, then you've got to take a step back. You've got to pause it and have the conversation, open it up and say, look, thinking about this further, we spoke internally, I'm not clear on how we're actually going to help your company justify, $100,000 or $200,000 or $50,000 because I'm missing something. Can we do some more work on that before we go further? I think if you get too far in the process without having this sort of solid foundation for the deal itself, the problems you solve, how it actually will help that company and what they're going to receive for it, then you're better off slowing down to speed up later, rather than get to the point where it's a no and then the deal's kind of done.
Understood. And Ken, what are you guys doing to kind of like address this new environment?
Well, so one thing I think on this topic of the getting to the CFO, we put a lot of effort into like angles of attack to get to the CFO. So we have a lot of partners that are have access to companies that we're trying to sell to, either to board members or to a CFO. We have like auditors, for example, that are trusted advisors to the CFO. So whatever angle we can take to either get an endorsement indirectly or get an introduction to the CFO, so we can influence his thoughts about Flowcast are very important. And then, of course, we have to have the messaging around how we're going to provide that accretive solution. I say besides that, the other thing that we've spent some time on that I think's had some nice return has been investing in intent-based solutions. So we heavily leverage software like 6sense and Qualified, which is another Norwest company, to find the people that are in the market really considering buying something. I mean, there's a lot of people that are interested, and we want to talk to them too, because they could buy something downstream. But what's beautiful about these intent-based solutions is they tell you who's actually looking. They look at things like what other companies they're web searching on, whether web pages they're going to, what ads they're responding to, how long they spend on your website. And so that really helps our sales team focus on where they should spend their effort. And we've been seeing some nice return from that.
Very good.
Yeah.
And Phil, for you as well.
Yeah, John, I was just going to add everything Ken and Jimmy have said. It's spot on in my mind. I'll throw a new idea and then double down on a concept they've both spoken about. I'll do the latter first. The double down for me is we are continuing to have a heightened focus on our executive persona, our economic buyer, ultimately those folks, CFO and others that sit in the boardroom. And we've done it with the approach of we want to make leave and accommodations not a functional HR problem, but an actual business problem that everyone in the organization, not just the CHRO, should be paying attention to. So we've developed an ROI and maturity model that we take to market, probably similar to what others on this call use. Historically, the results of those models were predicated on what I would call HR results. We've morphed that to include more business results. And to give you a really tactical example of that, healthcare is a really good market for us. If you have a nurse that needs to take leave, a hospital being short of nurses has a direct impact on patient revenue, right? So if you do not manage that process, if you're not predictive in that process, you're going to find yourself in a position where you're in trouble. That's exactly what Jimmy was articulating in his retail example, right? That is drawing a direct correlation or a direct line between your solution and how the business generates revenue. If you can uncover that, you're going to be tremendously successful in any kind of economic climate. And then the final point I'll just say real quickly, I mentioned this embedded in my opening comments, but we had some perception that bigger deals are better, and our average deal size in our enterprise team is about 200K ACV, and our strategic business, it's approaching 7 figures. Those deals are great, but those deals are also really, really difficult to get closed in this climate. So we've kind of doubled down in that large space, and we've built a very, what I would consider a more transactional motion. That sales cycle is anywhere between 3.5, 4 months. They're going to be average deal size of 50 to 70 grand, but we can do them quickly. They're really repeatable. They're relatively easy to sell and easy to implement. And until we start to see a kind of a smoothing out in our enterprise business, we're going to continue to just try to dump gasoline on that fire.
Very helpful. Really, really appreciate that perspective. One thing we heard from the marketplace is during tough times, it becomes really important to drive rigor around process and to drive process discipline. And so I'm curious if you guys agree with that statement and how you guys are kind of reinforcing the sales process within your own organizations. Maybe we could start with you, Ken.
Yeah, I mean, we always have pretty good rigor around processes, but I think we've gotten kind of more focused on making sure we're doing it every week. So kind of having the weekly cadence of opportunity reviews and and forecast meetings with various levels of teams. One of the things we've implemented that has been helpful is we do, for our larger deals, for what I would call our enterprise business, we do large account reviews every few weeks, and we bring in our senior management, because often we have either new ideas and strategies or personal connections, like somebody that you worked with previously as a connection to to a CFO we're trying to get to. We'll try to set up calls with one of our C-level executives and whoever we're trying to target at the prospect. So that's been very helpful, I think, in terms of kind of pushing deals along and figuring out what strategy is going to work best, because every deal is different. The other thing, I mentioned it early, but we invest a lot in the partner mapping process. So like we'll pull our pipeline and our commit and gut deals, and then we'll try to see, okay, what partners have relationships with these accounts. And that becomes like a really important, really important data point for us, because we can see, will that partner give us some back channel information? Will they be willing to put an endorsement directly into the controller or the CFO? So anything we can do to make sure we identify which deals are likely to close, and then do everything we can to ensure that they're moving along in the sales process.
Very helpful. And Phil, how you guys are changing the process on your side or reinforcing?
Love everything Ken said there. We do a lot of those items as well. A couple of just general comments I'd make to the team. And again, I think this applies at all times. It becomes heightened during this type of environment we're in now. But when I think about sales process, the key to a successful sales process, in my view, is your sales leaders. So those of you that are fortunate enough to have sales leaders, those are the ones that are doing the day-to-day, week-to-week tactical review of pipeline. And it's incredibly important that when I review deals with them and with the team, that we all speak the same language. And I've heard Jimmy use some of this nomenclature a couple of times. So I'll just tell the team we're a medic shop here at AbsentSoft. I've implemented it at 3 organizations. Big fan of MEDPICC as sort of our discovery and selling methodology, and we've built that not only into our sales process, but we've built MEDPICC scoring into our Salesforce instance. So when we're all reviewing pipeline, we're looking at our MEDPICC scores and developing our strategies based on where MEDPICC tells us that we are in the deal. No selling methodology is perfect. MEDPICC isn't either, but for me at least, it creates a foundation for how we need to think about what our strategy needs to be to go get a deal done based on where we're at. And the other thing I'll say, John, is and I fall into this trap all the time. I have a tendency to only want to get involved in deals at the end of the sales cycle. My leaders and I are always challenging ourselves to get involved as early as we can, because doing things right early on is going to be a big part of doing things right later on. So we try to spend as much time at the beginning of an opportunity as we do at the end of an opportunity.
Excellent. Good to understand. And Jimmy, are you guys a MedPick shop, or do you guys follow like a different rubric?
Yeah, we use Medic. And so mostly on one side of our business, but we're sort of rolling out at the moment on the other side of our business. We had something else before we used. So I think I definitely agree with what Phil and Ken said. I think that can sort of summarize probably three main sort of areas I think that we're focusing on. The first is mentality. The majority of our team, like myself included, haven't worked through a period like this. The vast majority. So very much just thinking about it and the challenge that we have as an opportunity, not as an existential problem. So very much we talk a lot about leveling up during this period. And if we can do that, we can hone our skills, we can succeed during this time. When the market turns, we're going to be step function better than we were before. And maybe this is actually the thing we needed to actually achieve the goals we really want to achieve in the next 3 to 5 years. Yeah, so I think very much we talk a lot about that, and tie it to sort of the next thing, which is really around sort of the process and structure. The 2 points is, one is really focusing on what's in our control, and then keeping an eye on, but not getting distracted by what's out of our control. One of our VP of sales framed it really nicely, which is, let's make a list of the reasons we could lose a deal and then cross them off that list. And so, questions aren't deep enough. Let's make them better. Let's do a training. Let's really articulate it. Let's make sure we have a part of the process where we're writing it out. Slides look tired. Let's make them look better. Let's get a designer to fix them up. We're taking too long to turn red lines. Let's shorten that process. It's really about defining, and we're doing this for every team, which is what are the things in our control? What are the things out of our control? So if we can't control the stock market, can't control the macro environment, we can't control inflation. What we can control is preparing every day, showing up, practicing, role playing, asking the right questions, multi-threading accounts, who could be our champion. And so I think that's given a lot of ownership to each person on the team to really focus on the things that are going to make the difference. And then I think similar to what both Phil and Ken said, just on the rigor and structure side, we are making sure that we have the right analysis and data to be able to make the right decisions. And so actually being able to diagnose, every point of friction within, all of our revenue processes across sales, upsell, service, retention, and marketing to know, what's actually going on, and then exposing that data as much as possible to every actually person in the business. And so that, you give the control to the team and the ownership responsibility to diagnose and then to make those changes. That happens much faster than any kind of sort of central or top-down process.
No, thank you for that. It's good to understand you guys are being very comprehensive and holistic in terms of the approach to improving the organization. And it's one of those things. It's not like one silver bullet, but it's a lot of little things. And so it's good to hear that.
Hey, John, I wanted to interject because this is maybe a little off topic, but Jimmy made me think about something, which is that, I have been through these before. I'm probably the senior member of the group here. And, I've been through these downturns, and it's really interesting because they're all different. And I think part of the key, well, first of all, you'll get through it. I mean, you come out the other end and things will get much better. But the other part of it is really understanding what's driving the macro economy downturn and how do you subtly shift your strategy to survive. When I actually worked for another Norwest company a few years ago, and during the 2008 downturn, a lot of companies were going through the same kind of thing we're going through now, but it was different. It was banking led, and one of the things that we did strategy wise was we shifted the focus of who we were targeting, and in that world, it was really interesting. I had started a partnership with Gateway Computer, and Gateway was selling a lot to the K through 12 education market. Well, it turned out that K through 12 got a bunch of stimulus money because the government was trying to get the economy going again, and they gave the public schools a lot of money to invest in technology. We were able to tap into that, and through that partnership got access to a lot of those customers. So while a lot of companies were really struggling, we were kind of weathering the storm and found a market that was receptive and somewhat recession resistant. And, here that, we've done a little bit of that too at Flowcast. We had a lot of our business was based upon, kind of high growth, pre-IPO venture funded companies. And we saw this coming, and we saw that starting to slow down. So we shifted to kind of more mainstream, slower growth, but profitable companies that were running on different ERPs. And that, I think that early recognition and shift has really helped us kind of sustain some stability during a tough time. And just being aware of that, I would advise people to think about where can you go to weather the storm. The stuff that used to be good will come back, but if you find a market that's going to be more receptive, you're going to be in a better place.
That's a really good point. Really appreciate you sharing. And actually on that note, I know that like for a lot of companies at this point, they're looking to experiment with messaging. You guys mentioned that there's a lot more focus on ROI messaging, and there may be like experimentation with pricing and packaging, and also potentially with new market segments that can. You guys tapping into the education segment in your previous role. I'd love to hear about how you guys are thinking about those three things in the current market, like, the market segment you guys are going after, the pricing and packaging, and potentially the messaging too. It kind of like, flows in from the prior question too, but I'd love to get your thoughts on that. Maybe we can start with you, Jimmy.
Yeah, so we definitely are experimenting with pricing and packaging. I think very, probably even somewhat similar to sort of what Ken mentioned, thinking about it for the specific markets you work with. We've got quite a few different client types, from hedge funds, very large, to smaller, mutual funds, very large to smaller, private equity firms, disruptive companies, retailers, brands, and so they do vary. And so I think from a pricing and packaging perspective, being a data company, it's a little bit different from maybe a SaaS platform, per se, and the way in which we can sort of package those solutions for the different markets we work with. But I think generally some of the things that we've done that we've found helpful, and this kind of, I think, touches on maybe a question from Jim in the chat, is, how do we sort of put in place new options for new clients that are coming on board or existing ones? And so I think one of the things we've done is, new existing clients, we've given them sort of short periods of trial periods. So, you sign up, you get expanded access for the first 3 months, try some new products, for example, and then if you like it, you can upsell into it. If you don't, you don't have to, as a way to sort of bring it forward a little bit quicker, or to get the deal done at maybe a slightly higher sort of rate. We've also done a lot of existing client complementary trial periods of new product launches that we've done, which I think has been really helpful. Doubling down on existing client base is really important in a time like this. Running a lot of feedback to actually hear what they're after, what they need, how they're thinking about purchasing internally, as a way to input into that. And I think, from time to time, when clients have had they're in a tough position in that sort of short period, I think doing the right thing as a partner by your clients is really important. I think the long game, 3-4 years from now, and if there's a year or two where, we need to help them from a budgeting period and come down, or give them a little bit more product than what they probably should be paying, I think we're happy to do that to support them in those times. And so I think you've got to look at you kind of got a big picture across the whole business, but also get pretty micro when you need it and when it makes sense.
Understood. And Ken, it seems like you guys are going after like a new market segment in terms of like a different kind of customer personas. How are you guys editing the messaging, and how are you guys thinking about pricing and packaging as well?
Yeah. So, obviously in the old world, we were selling a lot to these very high growth companies. So we had a lot of messaging around, we can help you grow, we can help you scale. You're going to be adding 20 people to your accounting team. Flowcast can help you create the right processes and the right systems. So we've had to change a lot of that. We've had to talk about efficiency. A lot of accounting teams are staying the same. They're not some are contracting. And so we have to, show that we can help people be more productive and free them up to do more strategic type work. And so, our marketing team has done a great job of kind of creating those stories, those use cases, and getting the word out there. In terms of like how we price and package, we've tried to get more creative. Like I mentioned earlier, we tend to do 3-year contracts. In some cases we've done, rather than it be the same price every year, we've done a ramping contract. First price is a little less. The second year goes up a bit. The third year goes up a little bit more from that. So people are comfortable with that because they figure things are going to get better, and as long as they keep their costs down in the current year, they're in good shape. We've also done stuff like we recently introduced a second major product around compliance, and so what we did was we we were selling our core close management product, but we would give them a pricing option that would guarantee a certain price if they purchase compliance within a 6 to 9 month period after the initial sale. So, if we felt we couldn't get the whole deal up front, we would give them that option, and that gave us some kind of impending event to try to close that within the stated time period.
Understood. And how about you, Phil?
Yeah, quickly, I'll add to the messaging. When Ken talks about not all recessions or economic crises look the same, he's spot on. If it makes you feel any better, Ken, I've lived through a couple of these myself. For us, what makes this one particularly unusual is, despite everything that's happening, unemployment is at a historic low. So we've seen that as an opportunity to market and message around leave as a benefit. And if you think of an organization, even your own organizations, and what your benefit packages are, there's very little imagination left in benefits packaging. So we've seen some progressive organizations that are offering leave as a benefit, but we're actually spending a considerable amount of time on our messaging talking about leave as a benefit, and it's beginning to resonate, and it's helping us connect the dots to the earlier objective I mentioned of being more boardroom focused instead of being just CHRO focused. So we've seen some positive traction out of that. As far as the pricing and packaging, I don't want to be redundant, but I go back to my sales leaders here. They are really the keys to being successful there. They know what bad looks like. And for us, it's sort of like our minimum deal size of what we want to see based on what size the customer is. Outside of that, I try to give them unlimited flexibility to go get deals done. And if they have the opportunity to get a deal contracted, I want them to take it with a high degree of confidence, and don't feel like they need to check with a lot of people. At least in my mind, there's a tremendous amount of momentum that's a part of selling, and I don't ever like to artificially slow that down.
Okay, really good to understand. Hey, so we do have some questions that have been fielded from the group, so maybe we can pivot to some of those questions, and they're more like brass tacks, like tactical questions. But one of them was around terminations of convenience, and which is kind of crazy to think about when you think about subscription software, which is, hey, you subscribed, you're on the contract. Are you guys seeing terminations of convenience in coming up in discussions, and how you guys pushing back on that? Ken, maybe have you seen this in your deals?
I've seen it a few times, and the way we deal with it is, if somebody wants a termination for convenience, I would tell our rep to offer them a 1-year contract instead of a 3-year contract. So, that's the minimum commitment that we normally sell. And then, and I did have one example where somebody wanted a 3-year because they wanted the pricing benefit and lock-in of a 3-year deal, but then they wanted the termination for convenience. I think that's kind of having your cake and eating it too. And so I pushed back, and I think we ended up doing a 1-year contract, and we have a very high retention rate, so I'm highly confident that they'll end up moving forward in year 2 and year 3.
Very good. And Phil, do you guys see that in your deals by any chance?
Yeah, we do. It sounds like we see it a little bit more frequently than Ken does. So we've done a couple of things tactically. One, if we've got a champion, if we've got support of the economic buyer before we ever get turned over to legal procurement, we make it a point to call it out, right? And we talk about not only terms for convenience, but limitations of liability, cyber insurance. Those are the kind of the big sticklers in our deals when we get to the final mile. So we're very proactive in calling those out. Similar to the way Ken articulated it, we will offer, if they want a 1-year agreement, we will offer that to them. We don't like it. And if they continue to press, I try to get them to the point of where they have to tell me why they want it, right? And I know why they want it, and I know why their business wants it. But I'm trying to lead them down the path to point them to our material breach clause. So if I can get them to say, hey, we just want the flexibility to cancel when we want to, then that gives me the opportunity to say, look, that's not in the spirit of a business partnership. That's not something we're willing to do. If we don't hold up our end of the bargain, that's a material breach on our side. And that clause will take care of that. And you have the right to leave whenever you want to under that clause. But in the spirit of the partnership, we're not going to offer a term for convenience. If you want a 1-year agreement, that's great. We'll do that. We have a tremendous amount of faith you're going to stay with us. But fortunately, thus far, it hasn't caused us to lose a deal yet, but it comes up in at least 50% of our enterprise contracting discussions.
Understood.
That's an interesting point from Phil. I think really getting to the core of like what's the root cause of the ask is a really smart idea. That also might then lead, there might be like some concern that they haven't told you about. And it's actually X. You're like, actually, X is really easy. Go speak to 3 customers about it. And they do the reference calls, and then you're good. And so I really like that as a way to drive towards the root cause sort of reason and try and solve based on that.
Very good. So one question that came in is regarding kind of gives for closing deals. So what commercial gives or concessions are you guys willing to give in order to close on deals? I know you guys have touched on that throughout the conversation, but what are, I guess, the top 3 that you guys are okay seating on? Maybe we start with you, Jimmy.
Sure. I think, expanded access for a short period of time.
Mm-hmm.
And so I think, product is we kind of see that as like a good lever to pull, given that it is, an opportunity and basically sets the team up for an upsell in the future. And so that is like a win-win for both parties. The client gets to try out additional, expanded access. And for us, it gives us an opportunity to sort of demonstrate further value. I'd say that's the bigger one. Most of our business is upfront in terms of payments, and so the vast majority. And so every now and then we'll provide a shorter payment or a different sort of payment term, like a semi-annual. Usually that comes down to specifically for certain types of clients, maybe like smaller investment funds who haven't sort of built up the sort of the budget yet to be able to pay for everything in one go. I'd say they're probably the biggest pieces. Or sometimes, for some clients, some additional service. It's like another part of it, which we'll sort of bring in addition to additional data.
Gotcha. And how about for you, Ken?
Well, we have a few levers. One of the things that we've done is we'll give people a few months free, 2 or 3 months free to get started. So maybe the first year is a 15-month contract. And that's basically a discount in the form of, free months. But we do that because we know once they're on the product and once they're using it, they're very likely to stay with us, and we'll keep them for 6, 7+ years. Right. So I think that's one that comes to mind. Sometimes we'll give them discounts on implementation. We have a product that's very easy to set up and implement. So, giving them, a discounted price on that is sometimes something that feels good to them because it's a one-time expenditure as opposed to the annual subscription. And, we can use it to, close a gap on initial budget.
Mm. And how about for you, Phil?
Yeah, I think we're all coaching out of the same playbook here. Nothing really new to add. I'll say it a different way, John. I do everything in my power to maintain ARR and annual price increases. So virtually anything else I can give to maintain those 2 items, I'm going to see if I can do.
Very good. Very good. And Phil, you mentioned earlier that that it's really important to have momentum in deals. I totally agree with that.
Mm-hmm.
But we're hearing from the marketplace, and this is a question from the field, that folks are tending to just stall deals and deals are getting dragged out. So how are you guys addressing that? How are you guys creating that urgency in this market where people are just delaying things?
Maybe an odd answer to that question, but I'll go earlier in the sales cycle and I'll talk a little bit about what constitutes a deal in absence opt, or at least in my mind, a deal that's going to hit the pipeline that I'm going to talk to the board about. And we look for 3 things. We look for pain, we look for power, and we look for a vision for what the end state is going to be. We don't we don't have to have all three of those items to have a deal, but to feel pretty confidently, we coach our sellers. We need to have at least two of those items for us to feel confident. So we have what we look at as our early stage pipeline, and then we have what we look at as our qualified pipeline. And I'll say this from experience, when I was carrying a quota as a seller, I never met a deal that I didn't feel like I could close, right? And we spend a lot of time coaching our sellers to invest their time on opportunities that we feel like that we can get across the line. And one of the tenets of MedPick is you're always testing your opportunities, and there's 1,000 different ways to test the strength of your opportunities. But in my experience, if you have a stalled opportunity, it's usually either an opportunity that they weren't particularly serious about in the beginning, or B, you haven't tested that opportunity with enough veracity to feel like it's something they want to continue to move forward with. So again, not an exact science, but that's how we think about preventing our stalled opportunities.
Interesting. And Jimmy, how are you guys thinking about prospects that kind of stall out or just drag the process on?
I think I think I agree with Phil in terms of early in the process. I think you got to qualify out deals faster. That's the biggest part of it. And so find out why it's not a fit early. I think the biggest challenge you find is usually those deals that stall out actually weren't as strong as they needed to be to get across the line. And that's very much like in our control earlier in the process is to uncover that. And sure, sometimes there is something that changes, like budget changes last minute. Maybe she's selling to a public company, they have a disastrous earnings, and they're like, budget just got slashed. We're doing XYZ sort of cost cutting measures. I think generally speaking, the more you qualify up front, early as possible, the more you get ahead of it, the better your qualified pipeline is, the better your forecast is going to be.
Yeah, John, let me just double down on Jimmy's comment. I tell the sales team all the time, the only thing better than winning quickly is losing quickly, right? So that's counterintuitive to a lot of sellers, but it's super important.
It gives you more time to focus on other deals.
Understood. That's really good advice. So we talked a lot about selling into new prospects. One of the questions we had was, what changes have you made, if any, to sales plays into existing customers, or customer marketing, driving renewals, et cetera, et cetera. Ken, maybe we start with you on that one.
Yeah, I know it's been interesting because for a long time, we got a lot of our, we look at upsell and cross sell. The difference between those is that upsell is selling more user licenses to our core product that we sold them initially. And we saw a lot of that for several years because companies were growing and they were building the departments. And so they would add users, and we would just find that we let them add users. And then we say, hey, you owe us more money. That slowed down because companies are not hiring as much. So we've had to shift to more of, fortunately we had new products coming. So that's the cross sell part of it. And we've been selling more of these new products like the compliance product that I mentioned earlier. That's a little bit different motion. It involves like getting partners involved, consulting partners become very important in that motion. So we've leaned into that heavily. One of the things we've started doing that we, with our customers is some in-app marketing. We hadn't really leveraged that before. So, customers can now see, oh, they have this new compliance product and, I want to get a demo of it and, proactively, click on a button to get engaged with somebody that can take them through a demo. So, that I think that's been interesting. One other thing I would mention that we do, we separate out our what I call our expansion business, which is the cross-sell upsell business. We have a team of account managers that focus on selling into the install base. And then we have our account executives who are new logo hunters. They're trying to get the new customers. And they kind of work in different worlds, except we double comp on the first 9 months of upsell or cross sell after an initial deal is sold. So that motivates because the AEs are the ones that sold the deal. They have the relationship. And that's some of what I mentioned earlier, like this option to buy the new product at a preset price. There's a lot of motivation for the AEs and the AMs to work together to try to get that quick upsell within the first 9 months of, post sale. So, I think that's been an effective technique that, I would encourage people to look at.
Really interesting structure. Jimmy, any thoughts on that question?
Yeah. So we actually have for our investor business, we have a model where we have new sales is only focused on new logos. And similar, there's some benefit as Ken said on sort of the phone. We then have two teams that work with clients and so partner side by side. We have a CS organization, which is essentially responsible for user engagement, service, big part of the renewal, but also the upsell too. And they work hand in hand with essentially an upsell cross-sell individual we call business development professionals. And so that works really well in hand, really due to the way in which that we sell on the investor side. We have many users that can invest in the fund. They have many users. And so each user has different coverage, different companies they care about. Provides an opportunity to really expand out quite far and make sure you have personalized service for each person that matters. On our business working with retailers and brands, we just have one person who manages both of those. So slightly differently. So I think the learning is think about your end market, your products you're selling, the process, the engagement model you have, how they buy internally, and then structure your teams to actually deliver against that. I'd also say just because of, cost cutting, budgetary pressures in the environment, generally speaking, we've really upped our game on churn mitigation, and our CS organization and client organizations done a really great job on this. So it's getting out ahead of, risks far more in advance, like redefining what are the new risks this year that we didn't have last year or the year before. How do we identify them? How do we start the renewal earlier? How do we protect against it? And our team's done an awesome job. Really getting ahead of, many of these risks you can actually solve for as long as you're there early enough.
Excellent. And the last question that came in through the Q&A is around international deals. And so for the folks that have international presence, what are you guys seeing internationally? Is it a different market? Is it a better market? How are you guys approaching that segment? Jimmy, I know that you guys have some international clients, so feel free to touch on that.
Yeah, most of our international clients, so we have clients in Europe, Latin America, mostly Brazil, and then our largest client base internationally is actually China, APAC, so China, Hong Kong, Singapore, mostly. We've seen also challenges that are very much similar challenges, but for slightly different reasons and timings different. I think China generally, the tech market in China had its struggles and challenges earlier than the tech market had in the US, given regulation and regulatory pressures. And then I think in Brazil, there's also been challenges from like a election perspective, and Europe's had its own challenges too. And so I think some of the challenges are pretty similar, but I think depending on the region and the market, there are sort of more specific macro pressures that have sort of influenced them, and the timing's been different. And so I think very much just looking at your business in those different segments, and then finding out what you need to adjust for, what are your strategies to address that are going to be, is more important than using like a one brush to paint everything effectively.
Understood. And Ken, does Flowcast have international customers or?
Yeah, we and I would say international has been an important growth factor for us, especially during this macro environment we're in right now. We fortunately made a good decision to move into Europe a little over 2 years ago, and that's been a great move for us. It's true that the international markets are going to feel some of the recessionary effects, just like we do here domestically. But for us, that's a market that we haven't been in. So it was a lot of low-hanging fruit, and our competitors didn't have anybody to deal with until we showed up. So we're seeing very strong business there, particularly in some of the new markets we've invested in. We made a decision to go into Germany, which I was, my prior history, I was a little concerned about going to Germany because it took, I thought it would take a bigger effort than it did, but we found that there was a very receptive market to our product, and our team did a great job of localizing a website and creating demand gen in German. More recently, this year, we went into Australia. We hired an MD down in Sydney, and that's off to a great start. We're hitting our second quarter. They beat their plan in Q1. They're going to beat their plan in Q2. One thing I would mention, just on the topic of international, that we feel has been kind of key to our playbook is we tend to do a mix of sending over people from Flowcast and hiring locally. So like in the Europe example, we we took one of our rising stars who had, been at Flowcast for a long time and worked his way up from a BDR to leading our sales team in the US. And we sent him over there and put him in charge of Europe. He took 6 or 7 people with him and then hired locally. And they've got a fantastic team over there of, 35 plus people. They all come into the office every day. They hang out together, and just the culture that he's been able to bring over and instill over there has been tremendous, and part of the reason I think we've been so successful.
100% agree with that. I think definitely that combination of having people with local knowledge on the ground in country, and then sort of supplementing as well with either having people from maybe head office come over and spend a lot of time, or even moving there has been a big part of success. I think it's hard. It's very hard to do it. We've tried it about 7 years ago. We tried to do it from the US, I think, and learned a lot of valuable lessons around the failures and challenges you have when you try to call internationally. You don't have someone who speaks the local language as much. I think that's I think what our Ken mentioned is spot on.
Hey, so here's another question that came in just on the international front. Curious about leveraging intention data for international markets, especially Germany. Is there a successful outbound motion you've had in that regard? I guess are you guys able to leverage intent data?
Well, I mean, I mentioned earlier, like we rely on 6 Sense and Qualified, and I think those could be applicable to any country and any language. I'd have to ask our team, if have they seen it work in Germany, but we've seen it in a lot of different geographies. It's pretty powerful tools. The other ones I'd mention are like the review sites. I don't know if those are relevant to you guys, but for us, like G2 Crowd and Trust Radius are really important data points, and that's showing, we get reports from those guys showing like who's searching on Flowcast, who's looking up your reviews, right? And it helps us to determine who's in market and who we want to make sure we get to.
I just got the clarifier from the chat box as well. It's like they're curious about it from like a privacy perspective, because I guess there's just more privacy laws in Europe. And so does that impact how you guys are thinking about demand gen at top of funnel? I don't know if you have any thoughts on that. Yeah.
Jimmy's the European. We should let him.
I'm actually Australian, so I'm not.
Are you okay?
Yeah, I'm the Aussie.
Okay.
Other side.
Yeah. We have a very good general counsel who brings up the challenges of Germany, and I think we're careful on the things we're supposed to be careful on, but we're also trying to get to the market, and that's why I think for us, like I keep bringing up partnerships, but in a market like Germany, the partners are very important. We have some, we have consulting partners, we have software partnerships, and they have a lot of customer relationships that can help identify and bring us into accounts that that they have relationships with that are in market looking for a solution like ours.
Gotcha. Very helpful. And Jimmy, are you seeing any privacy considerations on your side?
We don't have that many clients in Germany per se. I think definitely though from like a Europe perspective, when we do have a number of clients across Europe, there is definitely a different privacy landscape there, and so I think making sure that your general counsel or compliance team or legal team is well aware of that, and then you have a plan for it if you're looking to do business in those regions is important from a protected perspective. And so we spend quite a bit of time making sure that we do that and we have that all buttoned up, but it's a smaller part of our business today.
Very good. Hey, well, I think those are all the questions that came through. So really want to thank you guys for taking the time to spend time with us and share your learnings in this market environment. Perfect time for a fire alarm. So the link will be to the recording will be shared after the session. And there's also a blog post that's associated with this topic as well that will be distributed in that follow-up email. But thank you guys again for taking the time to share your insights.
Thank you, John. Thank you all.
Okay,
Take care.
Bye.